Welcome, traders, to our lesson number 6, and we will talk today about a zone refinement. For me, a really important element in our trading. Don't forget, we will start with location, direction, zone refinement, zone qualifiers. Okay, that's a step by step. We have additional also, of course, supply our indicators. But that's a topic for the next lessons, right? Important for me is to talk about the zone refinement and why is it necessary to refine a zone? What are the reasons? And here, guys, we have, for example, okay, high quality supply, right? High quality, maybe, okay, zone duration, right? We spent a lot of time here, but let's talk about high quality supply in this whole area here. I will draw it also from here to here. Okay, and where's our next high quality demand? It was, wait, when we talk about this area here. Okay, let's talk about, we are here, that's the current price, and we are here in the middle, and we see, okay, we are really nice in the high area. We could definitely short the correction, right? The correction till, it's our trend. Can trade from the higher high, and this is supply, the correction to our previous higher low, or also in high quality demand. Okay, location, direction should not our topic here today. It is, I know it's not picture perfect, this location, direction, but I need this sample to explain the zone refinement. Okay, and what is the question here now? We could short the whole area here, right? Yes. And then the first question is, if we decide, okay, or step number 1 is always wider version, right? Wider version. Could we trade this? Yes, of course, always, right? Locations, we are looking always for fresh, high quality supply and demand zones. We can short the whole area here, and we can buy the whole area here. And now the decision process is, okay, that's nice. It is fresh. For example, yes, it's completely fresh. We'll talk more in detail for the zone qualifiers later. But the question is here, now, is the zone size good enough in case of profit margin? And that is a question for me as a trader always. It is so important, profit margin. I could get the 10 from trend supply zone, a really nice supply zone in a picture perfect downtrend, but I will never trade the zone without enough profit margin. Profit margin is a key for success, the key to make money. Okay, means check always your profit margin. And if we check the profit margin here, for example, and I will add a 1-to-1, yeah, here it's 210 because I will I use a 10% stop loss here, for example, yeah, only for that means here it is a 1-to-1. Oh, let me check where we create a new high quality demand area. That's here, right? That's a rally, base, rally. Means you could expect more strengths here. It is also an uptrend, right? It's also an uptrend. Means if we talk about trading to sell this supply area here, our profit margin is less than 1-to-1. That's a distal line. It's a stop loss. That means your target from the short here should be here, the 1.19198. Means maybe you get 0.4-to-1, right? And that make absolutely no sense, right? And here, that's the reason why we have the zone refinement tool. Okay, the zone refinement tool. And now our job is to check. Our job is to refine this zone. We definitely want a short. Okay, we're definitely looking for a short opportunity. Number one is I can change the wider version to preferred, and preferred should be this one here. This is my preferred version, right? Based, the proximal line is not on the lowest point, now it's on the lowest point on the body. Means, okay, I could increase my profit margin. Of course, I will decrease my probability to be filled, because the probability is always better when I move my start entry to the wider version that's close to current price. Now price has to move higher into my preferred version, right? Means I will increase my profit margin. Look at this. Now I get a full R, also a little bit more before I hit the proximal line of my demand area. Okay. Means, okay, the first step made absolutely sense to move my stop loss, my entry, my zone from a wider version, from step one, wider version, to preferred. Perfect. Okay, and now, for example, your one-to-one is also not enough. That depends on your results of your trade log, right? How many hours in average do you need per trade to make money? Sometimes if you have a great average of hitting quote, right, then it is possible to trade trades with lower profit margin, but most of the day a 2-to-1 should be the minimum for all trades, a 2-to-1. And here, guys, a 2-to-1 is not possible. The magenta line means only a 1-to-1. Okay. Okay, and now that is our step number two. Step number two is we have to use a lower time frame. That is now our job, a lower time frame. And guys, here it is not a rule from go to the weekly to the daily, for example, or the 960 minutes, or the, I don't know, the 1200 minute time frame. It is no rules. End of the day, my idea about time frames, it is only a time frame. Who cares weekly? Who cares 15 minutes, right? What means 15? Why not 14 or 16? But of course, we have the general time frames, and I think for me, it is absolutely fine to use it. For example, I have monthly, weekly, daily, 120, 60, 15, 5. These are my time frames. I don't use the 16 minutes, for example. It's not necessary for me. Here, guys, that means the next step from here, we are on a weekly chart. We want to refine this zone, means we will go to, to daily. Okay, let me add a little bit. 30 years. We will check the time frame here. We'll go to our zone. Yeah, supply. Let's go to our zone. It should be here. This is our supply. Guys, I never checked this before, right? It is a sample, a real sample. I don't know, maybe it is possible or not, but in case of it is real trading, live trading, okay? And we are looking for zone refinement of this whole weekly zone. Don't forget, guys, this is our weekly supply zone on preferred. Proximal, distal plus a 10% stop loss. Means now my job is to refine my zone, to increase my profit margin. And here, guys, where is my high quality zone? Where is my high quality supply zone that's possible to trade? And for me, guys, I will find like this here. Okay, this is for me supply. It's not the best. It should be for you as a beginner, it should be high quality. Well, look, I can use this here. Maybe that's better for you guys for trading. I would use another zone, a little bit a different proximal and distal line, but that is yeah, my own style. Let's use this one. It's a rally, right? 1, 2 base candles. That's the first decisive maybe, and then clear drop. Means this is our rally base drop. Now, guys, you can see how we decreased our zone from here to here to here to here. That's it. You guys know the profit margin for this zone is, of course, better. The probability to be filled definitely less, right? Our entry is higher, and our probability to stop out is also increased because we're using a stop loss here and not here at close to current price. Means, okay, that is that's another step here. We found a supply zone, and it's definitely possible to trade this area. Okay, I will check could we should be filled or not. Let me check. I will go to the right side and look at this, guys. We hit our preferred zone here, right? This is our preferred zone, sorry. I mean, we hit our refined zone. That's this one to the left. We hit it and we got a nice drop. Look at this. And here, guys, wow, that was a perfect sample, right? Here we hit our zone here, guys, and we got a huge drop, right? That's completely different. But important is for us our profit margin, right? You want to increase our profit margin, our idea here based, of course, only to this demand. Okay, let me add our 2 to 1 here, 210, not magenta. I will use yellow here in this case. That means our 1 to 1 from a wider from the weekly zone on preferred. Weekly preferred was here. We definitely want to take profits, here, right? That is important. Wider version, preferred version, the weekly chart, we hit a 1 to 1 here. Perfect. The daily, the first step in the zone refinement area, we got here 1 to 1. That means that's a 2 to 1, that's a 3 to 1, that's a 4 to 1, that's a 5 to 1. Means we get a 5 to 1, and that's completely different, right? Daily zone refinement 5 to 1, weekly preferred version 1.1 to 1. With a simple zone refinement rule, we were looking in the higher time frame supply area. We go to a next lower time frame looking for high quality supply. That's it, right? Here now we had a great trade with a result of 5 Rs. That's more than enough, right, for the most of the traders here. But for example, number one, case number one is, okay, maybe you want to refine the zone more, right? More and more and more. That's not enough. I will remove the weekly here, guys, right? That's a little bit easier. Now I will show you, okay, for example, you need more profit margins. A 5 to 1 is not enough for you. You need a minimum of 5 to 1 here, or you want to refine the zone on intraday timeframes. Our first intraday time frame is a 240 minutes. It's for me, yeah, what is it for me? It is not days, years. It's the first blueprint time frame. Okay, it's the first blueprint time frame. Let's call it like this. Now let's try to refine this zone here also on intraday time frames. Okay, means, okay, it is possible here to refine our zone or not. And guys, this is the daily supply zone. What we have here, guys, we have also supply here. Oh, sorry. We have also supply here, right? Highlight this in yellow. It is a drop-based drop. It means we found also supply here. Should we move a little bit higher, we have also here a supply zone. That is a rally-based drop or a drop-based drop, but it's definitely supply. Okay, we found two supply areas here. If you want to follow the level on top of level, then it's only allowed here to trade the higher one. I will remove the daily here and let's check was it possible with these trades here or not to stay in this trade. We'll go here and look at this. Should we took the first one, the lower level here, okay, we decrease the zone again and increase to the moon our profit margin. Look at this, guys. This is 1-to-1. Maybe you can't see that. Let me explain here. The level on top of level made no sense here. You see like this. We never filled the level on top of level. It means I will remove the level above. Okay, it's not all the time the level on top of levels work nicely. Sometimes it is a lower one. If you followed my grids, sometimes I recommend also the other level, right? Here I will remove this one. I'll remove this one. That means this is our lower level zone. One second here. That's also this one. It means the drop base drop. Okay. It was a part of a daily zone, and it was a part, of course, of the weekly zone. We refine only, right? And it means this is our entry. Now we refine it again, okay? And our profit margin is still, or a target, still here. The daily, or what daily? No, it was weekly demand. Means now, don't forget, the weekly preferred version was the 1.121. The daily was a 5-to-1. And now the 240 minutes is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Easily 11-to-1. Easily. Yeah, I think also more, right? The space here is a little bit too much, but it is easily 11-to-1 with a simple rule how to refine a higher time frame zone to a lower time frame zone. And guys, here again, it is again possible to use also a lower time frame, 120, 60, 15, 5, 1, up to you. But guys, if you're on the lowest time frames, 1, 5, 15, 60 minutes, it is not so easy. You will get definitely more noise. Okay, what I mean with noise, I will go to monthly picture and look how nice look this. Remove. How nice looks this downtrend, right? Without any valuation of our lower highs. Lower lows, lower lows, lower lows, lower lows. Very, very easy, right? We never broke any higher low, never. Yeah. And now we will check this on the weekly chart. It's only one step lower. It's only one step, okay? Upsala, what is this? 10 years, we need 20. Unfortunately, we need 30, sorry. 30 years. Unfortunately, yes. Yes. I can use it. I can use it. Here on the weekly time frame, it looks a little bit different, right? If we check the impulse here, okay, but look at this. It is a downtrend here, right? And then look, we broke the downtrend, right? And then we got a new drop. Here it is a little bit the same. It is an uptrend here, guys, right? It is an uptrend, means a trend reversal. And then we broke also this one. What I mean here, guys, and I'll show you also the daily. I think that is the best. Come on. Yes. Look how it looks like on the daily time frame, right? Completely different. Also here we have a picture perfect uptrend here inside, right? And you are short, that make no sense. Then we'll break this one, right? Again, in downtrend means if you use lower time frames, right? If you use lower time frames to refine your zone, you have definitely more noise. You will definitely get earlier trend breaks, trend reversals, okay? Please understand this, very, very important. That's the reason why my recommendation for students is for beginner students in my mentoring is never go to lower time frames. It make no sense at the beginning. Beginning is monthly, weekly, daily. It's completely enough. You will also not trade with real money. That's my recommendation. It means, okay, it's fine if you use a daily zone, okay? Later, step by step, of course, I'll teach also, and I recommend also lower time frames like in my grid, right? But yeah, guys, that is, I think, very, very important. Zone refinement. I hope everything is clear here. Should not let me know. Mention me below this lesson. Then we can talk about it, your questions, okay? Also the lessons before. Should something not clear, let me know, mention me, comment below the lesson, and then I will create another lesson. This is or this is not, that was zone refinement here. I hope it made sense for you. I think it is not necessary to, one second, to check or to talk about another sample, because it is always the same. It is always the same structure, right? Important is a profit margin. One more thing. I completely forgot. That's an important tool. We have another step, and the idea was, yes, that is our weekly zone, right? Preferred. And on daily, oh, come on, 20 years. On daily, we found this zone here, right? That was then our daily zone. Let me check. Yes, exactly. Daily zone. And guys, wait. This is our weekly, yeah? That was our weekly zone. This is our daily zone. And here, guys, you see our probability to be filled is less, all right? That's absolutely fine. It's necessary to increase our profit margin because this is our weekly entry. That's our daily entry. The probability to stop out increased also. And that's not good, right? Also necessary to increase our profit margin, but we can use another tool. And that means we will use this entry, the daily entry. That's absolutely fine. That's definitely better than the weekly entry, look, but we will not use the stop loss from our lower time frame daily. We will stay with the stop loss from our weekly. It means we will mix the weekly and daily entry and stop loss, right? That means now the probability to be filled increased, but in general, our if you should we use a stop loss in the daily, our probability to stop out increased also, and that's not good. But we use this case here. That means our probabilities to stop out is the same, right? Is the same, because we will use the weekly stop loss. That's possible. Now you have a bigger zone on daily. Yes, it's not so small like you will use the zone only here from here, but to decrease your zone to stop out. And for me, that's a very important. For me, it's very important to not stop out. I don't want to lose money, right? Sometimes I use, or most of the time, I use like this, this trading style, this entry and stop loss style, because important is I have a big risk size, guys. I don't want to stop out with the whole risk size. For me, it's important that the trade worked out, right? That the trade will run or drop in my direction, then I make more than enough money because my risk size is so big. Here you can use like this, and that's also absolutely fine. It is never right or wrong to choose one of these zones. Not the weekly, not the weekly wider, not the weekly preferred, not daily. Also, guys, you can use the daily preferred if you want, right? That is like this. Let's check if we are filled or not. Here, guys, we will never filled, right? I don't know. I never know. I never know. The only thing is I use the most of the time the best entry with the best stop loss, the best entry to be filled. I don't want to miss a trade, okay? And the best stop loss far away from the current price, the far away to decrease my probability to stop out. That is it. That is the reason why we have always also different trades, guys. That is the reason, because we make different decisions in terms of profit margin. Trader A, that's absolutely fine. Trader B is super aggressive. They want to use this one, right? They're never filled. Trader A make a lot of money. Trader C used the 240 minutes time frame, right? That was only here. They made double of rewards than Trader B. Completely different, okay? Nothing of this is right or wrong, right? Make absolutely sense to use all of these time frames, okay? All of this lower time frames, refinement. It's never wrong to refine a zone from monthly to a 1 minute time frame, but know your probabilities, know your odds, okay? In terms of entry, profit margin, and stop loss. That's it. Thank you, guys. That is, I think, very important. This was a very important lesson for all of you. Again, should you have any questions, comment below this lesson and also mention me, and you will get another lesson of this. Next step will be some qualifiers next week. Have a great week, guys. Bye.